Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we are diving into a report so twisty it's like a soap opera, but with spreadsheets. We're looking at CirTran Corporation's annual report, and let me tell you, it's a bumpy ride, buckle up, because it looks like this company is fighting for its life. This is their Form 10K, basically a yearly checkup on how the company is doing for the fiscal year ended December 31, 2024. So what's the story? CirTran makes and sells stuff specifically. They've got a deal to make and sell Hustler branded products. Yes, that Hustler. Think condoms, e-cigarettes, energy drinks, all sporting that famous logo. They work through a subsidiary called LBC Products and have an agreement with a company called CORP, who are licensed to use the Hustler name. This deal is super important for CirTran, and if it falls apart, they're in trouble. Also, CORP needs to keep the Hustler organization happy by paying the royalties. The agreement gives CirTran the exclusive rights to manufacture, distribute, and sell certain use-defiler products. CirTran gets to keep 120% of their cost of goods sold, plus 10% of gross sales, and CORP is supposed to help with some of the marketing costs. This agreement is active until the end of November 2000 sales, and CORP is supposed to help with some of the marketing costs. This agreement is active until the end of November 2024. So the question is this Hustler deal working out for them? Before we dive into numbers, remember this company is small. Their commission file number is 000049654. This kind of stuff doesn't matter to general audiences, but is part of the SEC requirements. Now, about the risk factors, they are a smaller reporting company as defined by the rules of the SEC. We are not going to focus on every risk, but let's just say they have a lot. One thing that stands out is this whole going concern issue. What that means is that their auditors are worried about whether they can even stay in business. Here they are talking about cybersecurity, which is a must-have in the current environment. They say they have a system for managing cyber risks, including working with a third party to monitor for threats. They mention that they might get involved in lawsuits sometimes, which is pretty standard. As of the end of 2024, they didn't have any big legal battles going on or lawsuits threatened by or against them. That's good because court fights are expensive and time-consuming. If you want to buy or sell CirTran stock, it's traded on the pink tier of the OTC markets group under the symbol CRX. Keep in mind, this is not like trading on the New York Stock Exchange. There isn't that much trading happening and the price can jump around a lot. It is trading below $5, making it a penny stock subject to specific rules and sales practices. Specific rules and sales practices. Specific rules and sales practices. They have a plan to issue shares to employees, directors, or consultants, 32,000. But remember that the company has over 4.9 million shares outstanding, so this is not very material. This section is the most important part. This is where management actually tells you what's going on. And here's the headline. They have suffered big losses. Their future depends on whether they can make enough money to cover their costs. They are trying to get more cash. The auditors saying going concern is a big red flag. Now, let's talk numbers. In 2024, CirTran took in about $1.3 million in revenue, which is about $300,000 less than the previous year, a drop of almost 20%. Think of it as losing 1 in 5 customers. The cost of sales also decreased, so they made a gross profit of about $840,000. The cost of sales also decreased, so they made a gross profit of about $840,000. The reason for the drop in income, they say, is due to lack of licensing revenue in an international market. Employee costs were pretty stable at around $515,000, but their general and administrative costs shot up by over $360,000. They state this was from more marketing to launch the product on detail chains. They ended up paying out more than they made in selling and launching costs. Things get worse. They had almost $2 million in other expenses, mainly due to interest and losses from how they valued some of their financial instruments. They had a loss from discontinued operations, meaning their old business isn't going well either. They owe a lot of money. There is almost 2.5 million outstanding with a company named TechFine. Plus they had advances from related parties, people connected to the company. They listed the accounting policies they believe are critical. We will skip that. It doesn't matter as much. Here is the audit report for CirTran Corporation. The most important thing here, more going concern language from their auditors that raises substantial doubt about the company's ability to continue as a going concern. Here's a snapshot of their financial situation at the end of 2024 compared to 2023. Accounts payable, the money they owe to suppliers, went up to $762,000. This indicates liquidity and a problem in cash flow to meet immediate obligations. Accrued interest, the interest they owe on their debts, is over $6 million. This shows just how much debt they're carrying. Derivative liability is over $2.4 million, up from about $1.3 million the previous year. They are not doing well and will likely have big issues down the line with paying these debts off. Their net loss is over $2.6 million compared to 2023, where they had income over $20 million. That happened because they were able to clear off past debts and did not happen this year. CirTran has various risks, including the issue with Playboy Enterprises. It is now time-barred debt. Diving deeper into the long-term debts, they have a schedule of note payable, with a major portion being with a former service provider of past due accounts payable, totaling to $733,000 in. Now let's focus on the convertible debentures. The most important item for debt in this situation is the 5% stated interest rate. The biggest portion is the Tecker fine, with a maturity date of 2097 valued at $2,390 These are shares given to the members of the company as incentives. Very standard procedure to value employees and retain them. Okay, having waded through that financial swamp, what's the verdict? CirTran is in a tough spot. They are depending on selling Uster products. We have to remember the fact that they are operating under other companies using other brands. If that fails, they seem to have big issues. Numbers don't look great, they have a lot of debt, and the auditors are very worried. One last thing, it sounds like CirTran has no plan to secure authorized shares. This lack of planning is concerning, as it is likely that conversions are unable to be fulfilled, exposing the company to default. So what do I think? CirTran is steering through some treacherous waters. They need the Yustler deal to pay off big, and they need to manage their debt before it drowns them. Remember to subscribe, like, and comment for more deep dives into the world of corporate filings.